Hello everyone and welcome to Momentum channel. Today is an exciting day. Not only it is the anniversary date for when I met my wife for the first time, but it is also a day when we are going shopping. What I'm going to do in this video, I'm going to walk you through my Wealthsimple Trade portfolio and go through it while the stock market is open, do some shopping in the stock market and talk about my rationale and thought processes, how I go about deciding on the stocks that I want to buy, and also walk you through transparently the entire holdings that I have in my portfolio with Wealthsimple Trade. I hope you find this video beneficial. I think you're gonna definitely do so, so be sure to watch it until the end and then let me know what you think. Let's get into it. Alright, so here we are logged on to the Wealthsimple Trade account. You can see the total balance that we have in this account right now. It's sitting close to 19.3k, and it's divided between three different accounts that we have here. We have a personal account. It's a non-registered account where we have 25 different positions and holdings in terms of stocks and ETFs in this account. We have an RRSP or registered retired savings plan account as well, where we have 7 positions, and lastly we have a tax-free savings account, and here we have 14 positions in this account. I'm going to take a closer look at the personal account, and here we have a little bit of money left over. I believe just over $200 in cash, which you're going to go through and buy some stocks today, and or possibly some index funds or ETFs. You would notice that the number keeps changing because right now the stock market is open. It is around 9 a.m. Mountain Standard Time, so as a result of that you can see the stock market is live, and you're going to see some ups and downs in the performance of different stocks and holdings that we have in this portfolio. Alright, before we get started, maybe I can walk you through quickly different positions that I have here, and then after that I'm going to tell you which one of them I plan to buy and at what price. So we do have shares of Apple here. You can see 6 shares of Apple with a return of 15.80%, not too bad at all. We have 51 shares of Air Canada showing an overall return of 21.5%. Quite pleased with that. Bristol Myers, we have 6 shares showing a return of 23%. We also have 10 shares of Bank of Nova Scotia showing a return of 14.7%. We have 3 shares of Salesforce. It has got a hit recently, but it's still showing a positive return of 8.36%. We have 4 shares of Corsair Gaming Incorporated, and we have showing a return of negative 5.4%. Fastly is the next stock that we have here. We have 9 shares of that. It is showing a return of 8.8%. Gilead is a pharmaceutical company. We have 4 shares of that. Hasn't been doing as well for us, and it's showing a negative 11.4%. Jet Global Crossing Airlines Group, we have 7 shares of that. This was probably one of my worst purchases, but essentially at this time it doesn't even allow me to buy any more shares, and on this platform it's not allowing that. I can only sell it, but since it's on the negative return, it's a minor one. In Canadian dollars and only $14. I have decided to just hold on to it, and I can't, as I mentioned, I can't probably add more shares to it on this platform anymore. Laurentian Bank is another holding. We have 22 shares of this bank. It pays a decent dividend. It is showing a negative 5.7% return. Norwegian Cruise Lines, we have 12 shares of that, and it's showing a decent 52% return. Pfizer is another stock that we own several shares of. We have 19 shares of that, and it is showing a positive return of 15% plus. Qualcomm is a semiconductor company. We have 5 shares of that, and it's showing a return of 35% plus. We have Royalty Pharma. We have 28 shares of that, and it is showing a positive 12% return. And Royalty Pharma does pay a dividend, and it's one of those holdings that I would like to grow over time and kind of maintain it for long term. Royal Bank of Canada, we have 4 shares of that, and it's showing a positive 9% return. SiriusXM, we have 1 share of them. We used to have more shares, but we sold them. We currently have 1 share of them, and it's showing a positive 13% return. Next, we have Virgin Galactic. We have 9 shares of them, showing a positive 25% return. Toronto Dominion Bank, we have 5 shares of that in our personal non-registered account. That is showing a 10% plus return. Tesla, we have 2 shares of that in this personal non-registered account, and it's showing a 50% plus return. A couple more to go. We have Vanguard, FTSE, Canadian Capped REIT Index. We have 5 shares of that, and it's showing a positive return of 5%. Verizon, we have 7 shares of that. It's showing a 3.79%. We have BlackRock, Canadian iShares, Canadian Select Dividend Index ETF, XDV. It is showing a return of 8.95%. We have 4 shares of them. And XIT is another one that I'm quite excited about. It is BlackRock Canada iShares Toronto Stock Exchange Capped Information Technology Index. So it focuses on the information technology stocks in the Canadian stock market in Toronto Stock Exchange, companies such as Shopify and a number of other renowned information technology companies. It is showing a very decent return of 21%. These are all-time return for my account, and I haven't bought these indexes or stocks such a long time ago. So like, especially for these ones, I think it's probably less than a year. So I'm quite happy with the return for an index or ETF, index ETF. And next we have XRE or BlackRock Canada iShares S&P Toronto Stock Exchange Capped REIT Index. This is not a Vanguard. You see we have a Vanguard one which was showing a 5% return, and this one, it's a BlackRock one, a similar as well index for real estate index, real estate investment trust. And here we are showing a return of 7.9% positive return, and we have 10 shares of that. Okay, so these are all the 25 holdings that we have in our personal account, and as you saw earlier on, we have about $244 here available, but some of it I've already scheduled to buy stocks before. Usually how I go about buying stocks in the Wealthsimple Trade account, and judging by the 143 days unavailable, you see that I tend to put a buy order, but not at a market buy, but rather at a limit buy. This really helps me take control of the price that I'm comfortable to buy the stocks for here in Wealthsimple. And one thing I've noticed is that if you buy a market buy, sometimes you would be surprised because the price that might be fulfilled might end up actually being fulfilled at one of the higher end prices. So for example, although the price is not traded at this any higher price, you might still get the stock at a price of $135 or 135, even 50. So you can get surprised that way. So I don't like that element, which is why I've learned my lesson, especially for stocks which the volatility of the price is a lot higher. I tend to go with market limit buy. This way I tell the Wealthsimple Trade that I'm comfortable to buy the stock at a certain specific price. If it gets to that level, fine, it's going to get fulfilled. But if not, I can keep my order open for up to 90 days, and it still would get fulfilled at the time. The only time that I tend to buy through a market buy is when I really want to buy a stock, and I don't care really if I buy the more expensive or less expensive. I'm fine with that because I really want to add it to my position. Or if it's perhaps an index fund, and we're going to do one example of each one of those scenarios, just so that you guys kind of walk through. One of the stocks that I really wanted to add to my position would be XIT. It has had quite a good run, so let's take a look at it. As you can see here, it is down today by almost 1%. So I want to add more to my position here. You can see my average purchase price for this stock is sitting at $36.72, whereas today it's trading at $44.44 last price. But it has also been up at $45, and the low price was $44.38. So let's go ahead and buy one at the market buy just to see how it works. Like I said, sometimes you might be surprised. It might actually fulfill at this same price that you see here, but sometimes it might actually really not work out to your advantage. But just for the sake of experimenting, let's just buy one share at the market buy. We're going to buy one share at market buy. And what you will notice when it comes to buying any stocks or index funds in Canadian dollars, there's no other costs whatsoever. There's no conversion fee. And that brings me to my second tip, as we're going to talk about it. So order has been sent to buy one share of XIT at the price of $44.4, and it's been fulfilled. So let's go back and see Now, if you switch back to our activity list on Wealthsimple Trade, you could see here you are going to be able to see the stock that we just bought. You would see there are a number of pending orders here. These are some of the orders that I placed, and as I mentioned, these are limit buys. They would only get fulfilled if the stock price hits the level that I'm comfortable with. Nonetheless, let's move on and take a look at our market buy for 𝐻𝐈𝐷. So we put an order for that, for the market buy, and in this case we actually got lucky because we bought it for the price of $44.43. So that was not bad at all. The price that was showing up before on the screen was actually the price of 44 and 44. If I go back to Google and to try to look at the price for this index, for let's say for 1 day, you can see the latest price right now is 44 and 42. So keep that in mind when you are trying to buy an index or stock at the market buy. You have a little of that uncertainty. So usually how I go about it instead, and I'm going to show you here on the screen, is I tend to go back and put a price that I'm comfortable with. So for example, Air Canada is one of those stocks that I've been trying to add to my position for. Let's take a look at it. Currently today it was up 3.66%, and the high price for today has been 23.98, and the low price has been 23.02. Obviously that's not a price that I'm as comfortable to go buy for, but let's say I'm comfortable to buy limit buy for the price of 23.30. Again, keep it in mind, this might not really get fulfilled, but at least you have a chance in case it does, maybe whether today or within the next couple of days, if you, depending on how long you want to keep this order open. So I'm going to put one buy order. There's no fee. As you can see, you could keep this order open for up to 90 days or until this order is filled at the price that you're setting it for. Otherwise, if you don't check this box, the order would cancel at the end of the day if it does not reach this price to fill your order. So if you don't want to reset this every single day, as long as you have a price that you're comfortable with, you can keep this order open for 90 days by checking this box. And I'm going to place this order. You can see one order has been sent. I would get a confirmation if this order has been filled within the next 90 days. Otherwise, it would be listed on my activity list, and I can cancel it at any time, or just put a new order if that's something that I choose to. Alright, but before I end this video, I want to quickly walk through the rest of my portfolio for registered retired savings plan and tax-free savings account. And before I wrap up this video, and at the end, I'm also going to share with you what is going to be my investment strategy when it comes to this portfolio for the year 2021. So stay tuned with that. Alright, so let's hop over to our tax-free savings account. Here we have 15 positions. I'm going to transparently share what has been my overall portfolio and the overall return. Here we have one share of Apple showing a positive return of 21% plus. AbbVie, we have 4 shares of that, and here we are showing a positive return of 43%. Carnival Cruise, we have 26 shares of them, and we are again showing a very decent return of 46% plus. We have 1 share of CrowdStrike, and here we are showing a massive 114% plus return. Quite pleased with that. CrowdStrike has been a really wonderful stock for us. Facebook, we have 1 share of that showing 32% plus return. Manulife, we have 3 shares of that showing 37% plus return. Norwegian Cruise Lines, we have 7 shares in this account. As you saw, we have a couple on our non-registered account, but here we are showing a 61% plus return. PIMCO Dynamic Income Fund is another stock that we have 6 shares of, is barely showing a positive return of only 0.35%. Ryokan Real Estate Investment Trust, we have 3 shares of them in our tax-free savings account, showing a positive return of 12.6%. Store Capital, we have only 1 share. This was more so from experimenting and wanting to see how it returns. And we have 1 share of them, and it's showing a very decent return of 28.6%. True North Commercial Real Estate Investment Trust, TNT, it's a Canadian REIT. We have 1 share of them. It's showing a 19% plus return. You notice that we have a number of real estate investment trusts here, especially in our tax-free savings account, just to protect our income from a taxing perspective. We don't want to pay taxes to Uncle Sam as much as possible, based on how we can maximize and utilize our tax-free savings account that we have here in Canada. And next we have Vanguard 𝗖𝐋𝐈𝖖 Canada All Cap Index ETF. So it's a all total stock market kind of index funds. It's showing a very decent return of 25%. We have one share of that. We have 3 shares of VMware. It's showing a return of positive 4.87%. Vanguard 𝗖𝐋𝐈𝖖 Canadian Capped REIT Index. We have again 3 shares on this account, showing a positive return of 3.31%. And lastly, we have as well 𝗋𝐈𝐷 here in this portfolio too. We have 1 shares here, and it's showing a barely a negative return of 0.02%. So usually how I go about this, as long as I'm comfortable with the stocks and holdings that I have in my account, which for the most part I am, I will try to buy more shares of the companies that are showing a negative return or probably has gone down on the day. This way it allows me to really take advantage of the dollar cost averaging. Here in tax-free savings account, we only have $13 cash left, but you know, we're close to end of the year, so the tax-free savings account contribution room would reset on January 1st, and definitely I'm waiting for that day to come. After that, I would hopefully add more funds to my tax-free savings account and really try to take advantage of the this tax advantage account. We made a video recently and posted to the channel, and talks about the financial resolutions that you can kind of make in the year 2021, and we talked about taking advantage of those tax-free and tax advantage accounts. If you haven't done that already, be sure to check out that video. I will add a link definitely to, somewhere here on the screen, so you can take advantage of that. All right, moving on and taking a look at our registered retirement savings plan. Here we have only 7 positions. You could see here we have 3 shares of AbbVie showing a positive return of 19%. We have Artis Real Estate Investment. We have 4 shares, and it's showing a massive 55% plus return. Carnival Cruise, we have 1 shares of them here. It's showing a decent 65+% return. Morguard North American Residential Real Estate Investment Trust. It's one of the Canadian real estate REIT accounts. 5 shares showing a positive return of 7.7% plus. We have another share of PIMCO Dynamic here, 1 share showing a positive return of 38%. We have 1 share of Skyworks Solutions showing a positive return of 21% plus, and we have 11 shares of VMed Healthcare Incorporated. This one is showing a negative return of 14.6%. As you could see, majority of our holdings in these 3 different types of accounts are showing positive return. There are very few of them that are showing negative return, so quite pleased in terms of how these accounts are been actually performing. And if I were to show you the 1-year return, I think that would be interesting. For a registered retirement savings plan, our 1-year return has been 81%, just incredible, especially given the timing. I really opened this registered retirement savings plan at the time where the stock market was doing very poorly, and really hit the jackpot with that. As for our tax-free savings account, you could see here we are showing a positive return for 1 year of 53%. Quite happy with that as well. And lastly, we have our personal account, the non-registered account. Here 1 year return has been 33%. This is the larger of the 3 different accounts that we have in terms of the fund size. So there you have it, folks. My 3 different accounts, walking you through transparently what are the different holdings that I have here, and what has been the best performing stock in terms of return, and also the worst performing stock that you saw here on the screen earlier on. In terms of my strategy when it comes to investing in this account, definitely I want to gradually grow my active investing portfolio with Wealthsimple Trade. One thing I will share with you is that here on Wealthsimple Trade, currently they don't offer a US dollar account. So if you can buy US dollar stocks, indexes, and you name it, there is going to be that conversion fee that you have to pay, and that although it is only 1.5% conversion fee, and this may not sound much, over the long term, especially if you're an active trader and you buy and sell US dollar stocks frequently, you're going to really see how it's going to snowball, and you're going to lose a lot. So if you are an active trader, I think it's you're better off perhaps going with a different brokerage firm, such as Interactive Brokers or Questrade, or perhaps other brokerage firms out there, where they allow you to have on hold and maintain a US dollars account. That way, although you're paying a conversion fee, but you will pay that conversion fee only the very first time that you deposit funds into your account. You convert it to US dollars, and then you have that account in USD, you can buy and sell in US dollars, then you don't have to every time pay the conversion fee. So over time, be really cautious of that. For me, I am okay maintaining some of my US dollars account, but really lessons learned, I'm trying to now identify more of a Canadian stocks and use my Wealthsimple Trade for more so for Canadian stocks and index funds, because there's no fee whatsoever, and that's really perfect account for that type of investments. And instead, I will use my Questrade account or sometimes my Interactive Brokers account for the US dollar type of index buys or stock buys. That's a tip that I learned. Definitely want to, regardless, grow my account with Wealthsimple Trade. I do have a Wealthsimple Invest account. That's more of a passive investing, which you don't have to think much about. You just set your risk tolerance, deposit funds into it, and Wealthsimple would buy the quality index funds for you. I'm definitely adding to my funds on that account as well. So it's a combination of funding my different accounts over time, both actively and passively, and growing my funds over time. Definitely want to take advantage of the power of compounding interest over time and grow my holdings in these stock market accounts. What is your investment strategy when it comes to investing in the stock market in the year 2021? Are you just invested in the stock market, or are you taking advantage of other investment avenues such as real estate or perhaps cryptocurrency, gold, or you name it? I would love to hear from you. Let me know in the comment section down below. If you found this video beneficial, guys, please be sure to give it a thumbs up and share it with someone who might benefit from this video as well. I put a lot of effort in adding videos frequently on this channel, so hopefully I can bring value to all of our viewers. And if you haven't done that already, I would love it if you could subscribe to our Momentum channel. Here on Momentum, we post weekly videos about stock market investing, financial freedom, and finances. With that being said, thank you so much, guys, for watching, and I hope to see you next time.